All of this anticipation into the ECB decision and the market was still caught off guard by the central bank. The big question heading into the decision was whether or not there would be a formal announcement about the end of QE. And though the ECB delivered on this expectation in an effort to seriously diminish a bullish euro reaction, it pulled a rabbit out of the hat with the news that there would be no rate hikes from the central bank over the next 12 months. Beyond the big surprise, the move was also highly unconventional, forcing many weaker euro longs to reduce their exposure and head for the sidelines. We saw a massive intraday drop as a result, with the move rippling through to the rest of the currency market, triggering broad-based US dollar demand. We believe all of this plays into US administration protectionism and is giving us a little hint into what lies ahead when it comes to monetary policy and global trade wars. Interestingly enough, when we reflect on the Fed and ECB decisions, there was a similar delivery from both central banks. Both the Fed and ECB delivered on the hawkish things the market wasn't sure they would deliver on, but then going out of their way to offset these actions with plenty of dovishness. So yes, the Fed called for an added hike in 2018 and the ECB announced the end of QE, but there was a clear move on the part of both central banks to seriously diminish the impact of the more hawkish leaning moves. All of this had the market forgetting about solid retail sales out of the UK and US and contemplating the implications of these latest central bank moves. Everything is getting a lot more political these days, and we'll be watching closely if there is any reaction out of the White House to the ECB move. Clearly, if the president is intent on pushing forward with protectionism and soft dollar policy to achieve his objectives, he will need to be thinking about what the ECB just did. This will make for an interesting market dynamic going forward, and with that said, we believe it becomes even more important right now to know how to take a step back and look at the market from a weekly time frame rather than the daily timeframes. As far as Friday's calendar goes, the calendar is quite light, with only Eurozone trade, Eurozone CPI, and US industrial production standing out. But the market will probably be better for it as it needs to keep its focus on these bigger picture macro risks, which include any reaction from Thursday's ECB move or any updates relating to US tariffs. That's all for now.